Hello, happy Tuesday. Today we are talking a little bit about different business entity structures, a guide to choosing the right business entity. Um, as we get into our main content, I want to talk a little bit about our website, and you can go to www.communitycpa.com and you'll be able to find us and all the different locations and the services and our partners are all on there for you to find and choose. And you can meet with us after our webinar if you have additional questions or something that has been bothering you and it hasn't been a content we've covered. Feel free to go to appointments at the top there and find myself or the other partners. Would be more than happy to help talk with you and consult your situation. So something that I always like to ask up front is if you haven't liked or subscribed, please make sure you do. It really goes a long way and it really shares that algorithm with more people in your network, in your circle, so that we have a chance to make an impression, a good one, like um, the one we've been making in the last, 5 years since COVID when we first started our webinar. So I want to encourage you all to do that at this time if you haven't done that already. If you go to our YouTube channel, you can do that by going to YouTube and typing Community CPA, right? Community CPA, and you'll come to our YouTube channel like this one with many different languages. We cover English, Spanish, and Chinese. So you can choose any of the content that you like by hitting that little magnifying glass and entering any content that you wish to find out more about. That could be tax planning, that could be the new OBBBA, and we have all the newest and most up-to-date information. So hence, you want to take a look at the timestamp in which these content have been produced and uploaded. So the newest ones are the ones that you want to pick and choose, as we don't want you to look at old content that have already been um, expired and maybe not relevant as much. Okay. So we have two books we always talk about. It's our favorite Ying and her book, Appointment with Ying at 8 a.m., talking about starting your business, right? And 10 a.m. is about growing your business. And I believe her 2 p.m. is coming out soon and is about expanding your business. And spoilers alert, I'm sure many of you already heard Ying talk about it. Her 6 p.m. will be the last of 4 book series and it's retiring from your business. So I heard that's only a page and it says there's no such thing as retirement. So just letting you guys know. So I have to read this no responsibility disclaimer. At Community CPA, we are providing these webinars in order to disseminate knowledge that are free, that may help our business clients to grow and you to learn at your own leisure. But we are really not responsible for any damages the attendees or viewers here today may suffer as a result of following any of the advice or information here and provided. Although we are always doing our very best to stay informed, as you know, information could change or become obsolete at any time without any notice. So just kind of keep that in mind. But today's main content, today's topic for today is choosing the right entity type. As you all know, it's so important to choose the right entity, to choose the right house, right? For your family, for your business, so that you are growing properly and you aren't overpaying on taxes. So these choice, um, they really directly impact how your business is taxed, and the level of administrative complexity changes from tax entity to tax entity. And so I want to make a note here that today's content is not really focused on the legality of things and the legal liabilities, more so that today we're covering more the tax implications. And so please note, for any legal or liability advice, you want to consult a legal professional. Okay. So what entities are out there? So we're going to pick the 5 most common and most popular 5 tax entities that are available at this time. And it's sole proprietorship, S corporation, partnership, limited liability company, and C corporation. So sole proprietorship is the most simple of them all, right? It is basically you. Okay. A sole proprietorship is really easy to set up. In fact, there's really nothing to set up because it's your business and it's using your social to run the business affairs. Okay. Sometimes um, people might get themselves confused. Oh, I have a EIN and so on and so forth, but where that eventually lands is in your personal taxes, right? So income and losses are always reported on the owner's personal tax return. And it's on the form called Schedule C in your personal 1040 tax return. And the income is always subject to 15.3 federal self-employment tax, and the business itself isn't taxed separately. Why? Because it's inside your personal tax already, right? The owner may also qualify for QBI deduction, also known as the qualified business income deduction, potentially reducing the effective tax rate. Now, aside from obtaining the necessary licenses or business name registration, there's really no paperwork needed, like I said in the very beginning. But it is always important for the owner to know you are personally liable. There's no protection or anything at all. So you are liable for your business debts or any legal obligations. Keep that in mind. So then you hear a lot of people talk about this S corporation. So today we'll talk a little bit about that as one of the 5 most popular entities. It's a pass-through entity with some payroll considerations rather that you have to think about with this S corp. Okay, S corp is really designed to offer this pass-through tax benefit while imposing stricter rules. So what does that mean? S corp, they don't pay income tax at the entity level. It's a pass-through entity. So everything falls through the business tax return into your personal tax return through K1. Okay, this K1 is given to the owners, shareholders of the business, and a tax benefit for the shareholders who are employees receive a salary, which obviously is subject to payroll tax, while additional profit distributions aren't subject to self-employment tax. But remember, the salary must be reasonable. So there is that reasonableness that you need to consider. And if you want to know how to calculate that, you can reach out to us and we could help figure that all out so that it makes sense and so that you are passing that reasonableness when you're filing your tax return. The business is also eligible for QBI deductions as well. To qualify, there are more considerations. S Corp, you must have 100 or fewer shareholders, and they all have to be US citizens or residents, and only one class of stock is available. They must file this 2553 form. It is a election form used so that you could become an S corp. So there is no such thing as I want to be a S corp right away. You have to go through this form to become an S corp. Okay. And there is a tax return that needs to be filed apart from your personal tax return. So it's called the 1120S and it is separately required. So you file your business tax return. Then from that, it will generate a K1. So you'll know how to report your share of how your business did to your personal tax return. So you need to file now 2 instead of 1. There's a partnership type of entity, and it's also a pass-through entity. And the partnership involves 2 or more individuals, right? That's why it's called a partnership. And the common types include general partnerships, limited partnerships, LLPs. Okay. Partnerships are pass-through entity just like the S corporation. The business files what is called a 1065. You remember the S corp filed the 1120S. Partnerships file 1065. And the income and this loss is distributed through the K1, just like the S corp. And you'll report that to your personal tax return. So general partners, they must pay self-employment tax, while limited partners do not. So kind of keep that in mind when you're structuring that. And if you aren't sure if that is structured properly, you can obviously consult this as well. The business is, again, eligible for QBI deductions. And partnerships, they require a very detailed partnership agreement and coordinates the record keeping and clear profit sharing arrangements. So while they're more complex than the sole proprietorship, it is more flexible for you as an option if you're growing your business. And there are definitely less constraints than the S Corp that we talked about earlier. Similarly, there's the limited liability company that's also flexible and customizable. And the LLC uh, merges the elements of corporation and partnerships, offering the owners called members both operational flexibility and liability protection. So by default, a single member LLC is taxed like sole proprietors on a Schedule C, and a multi-member LLC like a partnership that we talked about earlier. But LLCs may elect to be taxed differently if you're an LLC. So for instance, there are times that you'll come across people that have the name LLC on their legal name, but will tell you we are an S Corp. We're a C Corp. And that is because they filed an election. Just like the S Corp earlier, we talked about the 2553. There's another form called Form 8832, where you can choose to be a C corporation. So LLC gives you that flexibility to either become an S Corp or a C Corp. So your legal entity LLC will not change. However, the way you are viewed by the IRS or how you are treated when it comes to tax time may be different depending on what you choose to elect to be, whether at a C Corp or an S Corp. So LLCs that don't elect as a C Corp, they're eligible again for the QBI deductions. So LLCs require articles of incorporation and articles of organization and often must have an operating agreement. If you've created your company with some sort of online website and you don't have an operating agreement, we have a legal team that we can help create that for you. So you can reach out to us and we can make sure you have the proper operating agreement for your company. And though not as complex as corporations, they still have some state specific compliance you need to adhere to and meet their requirements. And so you want to make sure you consult your legal counsel on those things. C corporation. So C corporation is very scary to some of our small business owners. They heard about this double taxation. And so they don't want to come close to the C corporation. They just heard it's not something worth their time. So, however, a C corporation, although it has its double taxation, has many other benefits. We're going to talk about that. But when people are talking about double taxation, they're really talking about how the business pays taxes on its earnings. Currently at 21%, which is really low, okay? And shareholders, they must pay taxes again if the business issues dividends. However, if you are the owner and you're the sole owner of the corporation, of the C corporation, you may choose not to issue any dividends. So do you have the double taxation? No, right? Something to think about. So what are the benefits? What are the other benefits of a C corp? Could be that you have a lot of say so on what you choose to be deductible in operating the business. So C Corp, we always say C stands for capitalism. It benefits everybody at the top. So if you're the owner, you're the one making decision, you can choose for the company to deduct health insurance, retirement plans, or whatever benefit that you feel is appropriate for you to run your business. And that can really help you with reducing any maybe of your personal burdens that you may have because now the company is able to absorb all that because it's trying to benefit you as a person, as an owner, as a capitalist of this business. So C Corps, however, aren't eligible for QBI deductions. These entities really require the most administrative upkeep, including bylaws, annual meetings, board minutes, and other state and federal reporting. But if you have a legal counsel like Community CPA, and we did the formation for you, these are all included and these are all maintained. So they are no big deal. So I don't want our viewers today to walk away feeling like C Corp is not an option for you because you're too small or you think about double taxation. There's always a way. And I have to say, C Corp is the way to go these days. So if you haven't considered it before, please do that at this time. It will really help you a long ways. Okay. So one more thing, C Corps are ideal for companies seeking venture capital or IPOs. So I want you guys to know that. Hiring. So after you hire employees, there are things that you need to consider. So regardless of entity type, adding employees, they just really increase compliance requirements, right? So business, you must obtain the EIN number, employee identification number, and you need to withhold federal and state payroll taxes. Employers, you have to take on added responsibilities related to benefits, tax deposits, employment law compliance, everything to do with employees. And if you don't have a payroll company, I want you guys to also consider using Community CPA. We have a stellar um, a customer service and our team that works with our clients day in and day out and making sure your payroll compliance is really taken care of properly. So we have a advisory service package for workforce compliance. I know that there's a lot of pressure, more than ever, related to the upkeep of these documents. So reach out to us and we can let you know what are all the things that you need to consider and what are all the proper procedures you must have in place so that you can avoid like audit or any kind of ICE visit that may ask you for these type of documents relating to your employees. So what's right for you? There's really no universal answer to which entity is best because every entity that we covered are really the different types of companies that were created to benefit you in different times of your business growth. So the right choice really depends on your growth goals, your ownership structure, and financial needs. So tax optimization is a critical factor. For example, like an LLC electing to be an S corp status may help minimize self-employment tax if you set up properly. And we can coordinate with our attorney or yours to ensure your structure supports both your tax strategies and business goals. So just contact us if you need help or if you have additional questions like I talked about earlier. But if you need an appointment, you know that appointment button on our website I talked about earlier. You can click on that. You can find us. And I'm one of the 6 partners. I help with all of our business formation related services. I am one of the persons that you can also meet with when you're a brand new client. So I set the expectation for you and we understand your expectation and we see if we be a good fit for you. But this is a good way for you to take a look at all of the things that we provide as a firm and our contact information. You can go to our website or you can email Catherine at communitycpa.com or call 515-288-3188. And we are one of the only firms that actually are proud to say that we have always been this way. Wherever we have an office, we are Monday through Saturday, 8:30 to 5:30. Has been this way ever since Ying first founded the company because she understood that many of our small business owners, you guys are all working day in and day out. And if we could just be open one more day, hopefully you can find time to catch us and we can meet. So feel free to reach out to us if you have any additional questions. But I hope today's session was helpful in understanding what type of entity to choose when you're growing and what type of structure to be a part of. So we hope to see you again. And thank you for choosing Community CPA if you're already our client. If you're not yet our client, we hope to see you here soon and provide any kind of need and service that you may need. So we appreciate your time today and we hope to see you again soon. Thank you.